question from Jeetin, who asks, since the union budget proposes to spend heavily on infrastructure, will infrastructure specific funds go up in the coming years? Also, would you suggest investing in them? He's also asked for your opinion about banking sector specific funds.
Yes, I'm hopeful that some of these infrastructure companies will benefit. And infrastructure funds, we have very old infrastructure funds, and they have struggled. They were very popular at a certain point prior to 2008. They actually drove the 2008 bull run. It started with infrastructure stocks, but I think infrastructure has been a reasonably discovered sector, and a lot of companies are actually facing a problem of a different kind in terms of in a competitive market, their cost or the way they are structured. So I don't know which of these companies will do well. Then there is a problem with the infrastructure fund. Many of these infrastructure funds have very loose definition of infrastructure. Some funds have banking as part of infrastructure. Some funds have, in fact, many funds have such liberal definition of infrastructure that if you just drop pharma and technology from any fund, it becomes an infrastructure fund. Everything else could be part of it. So pharma, in IT and FMCG, three sectors excluded from any fund, and it becomes an infrastructure fund because you can justify. I was looking at this law some time back, and 65% of the Sensex can be defined or can be said to be infrastructure. So infrastructure is a very loose definition. I would say that invest in a flexi-cap fund. The fund manager will will try and tilt your portfolio depending on the potential, and don't try to write the infrastructure fund, because the problem of infrastructure fund has been they are out of the very promising sector. Pharma, FMCG, and IT are big drivers of any fund performance. So, and it is good to have them. So despite having good outlook for infrastructure, don't give up on the diversity. I'm very optimistic about the banking sector, and banking sector has also made a comeback, and some of the specific budget announcement is going to benefit banking sector substantially. Creating the bad bank, which will actually absorb or which will take all the bad loans, and that will be a one-time big relief for many of the banks, and that will relieve them to start running. Also, a big banking reform has happened in recent times, but it has gone, it has not gone unnoticed, but I don't think that it has been talked about, or it got just, did not get talked about as much, simply because we were too busy with the pandemic. If you look at, all the consolidation of the public sector bank, the promising banks getting consolidated, all the merger that has happened, then you have, government has gone about stating that they are going to privatize, sell those 2-3 banks, which they have clearly stated. They are also going to contribute to the developmental financial institution with a funding of 20,000 crore, which will end up holding assets worth 5 lakh crore. So this has been a big problem in India. These commercial banks, they borrow short term. We do our deposits, or they have current accounts, savings account balances, and they end up investing. All the corporate banks, the state banks and the ICICI Bank, they faced a problem that their investment was long term. They are doing some term lending to companies, which is for a 5-year term, 7-year term. So, and you have an asset liability mismatch. So we need, of course, I'm not sure that this idea will work, but at least it will take quite a good amount of pressure from the commercial bank. And so bad bank, commercial bank, banking reform, and the the NPA problem being marginalized or coming down gradually over the last few years is good news. So I'm very optimistic about the banking sector. But should you buy banking fund? No. If you buy any flexi cap fund, 35%, take note of it, 35% of these funds is allocated to banking stocks. So why have them?
Right.